Welcome to our session. Today, we're diving into the world of stock splits, as shown on the TipRanks upcoming stock splits calendar. It's a comprehensive look at both forward and reverse split methodologies.
I'm excited to get into it. So, we're talking about splits that change the number of shares without changing the overall value, right?
Exactly. It's all about maintaining the same total investment value. For instance, a forward split, say 1 for 2, doubles your shares while halving the share
Right.
price. So if you had 100 shares, you'd suddenly have 200 shares, but your portfolio still stands at the same total value.
That's super interesting. And a reverse split is the opposite?
Yeah, it is. In a reverse split, you're combining shares to form fewer shares while increasing the price per share. So, like a 10-to-1 reverse split means your 100 shares become 10 shares, but each share's value is multiplied by 10.
Mm-hmm.
It's kind of like condensing a recipe to concentrate the flavor, right?
Certainly, it's a neat analogy. But isn't there a risk with reverse splits in that they might signal trouble with a company's performance?
Absolutely, that's a valid critique. Reverse splits are often done to meet listing requirements or, to boost a share price to attract investors after a period of decline. While they don't immediately affect the total value, the market's perception can sometimes
Yes.
shift.
And looking at the calendar, companies like GrafTech NTL and Seg Media are planning reverse splits on August 29th, 2025. That's a pretty tight schedule on one day.
It is indeed. The calendar organizes splits by date and shows both reverse and forward splits. You have details like the split ratio and what each type means.
Right.
It helps investors anticipate how their share counts will change without changing the overall value.
So, to be clear, even if you own fewer shares after a reverse split, your total holding value remains the same immediately after the split, correct?
Exactly. The math stays consistent. For example, if you owned $1,000 worth of stock, after a split, forward or reverse, you're still holding $1,000, just with a different share count. The calendar even
Mm-hmm.
explains that the dividend adjusts proportionally too, so your overall returns remain similar.
That's reassuring for investors. But I think it's also crucial to consider market perception, right?
Yes, spot on. While splits don't directly change a company's market cap, they can impact investor sentiment. A forward split might make shares more accessible to smaller investors, and a reverse split might be seen as a corrective measure.
Absolutely. And the calendar isn't just about splits. It also offers tools like earnings, dividend, and even IPO calendars, correct?
Right. It's a treasure trove for investors. It gives real time updates on splits, along with tools like stock screeners, dividend calculators, and market movers. It's an arsenal for anyone serious about tracking market
Mm-hmm.
dynamics.
So, would you say that understanding these splits can give investors a strategic edge in portfolio management?
Definitely, knowledge of splits helps you predict share adjustments and plan your trades accordingly. It basically lets you see upcoming changes well in advance.
Right. Thanks for breaking that down. It's fascinating how much detail goes into these stock splits and the broader market tools they offer.
My pleasure. It's like piecing together a puzzle. Understanding each element helps you see the whole picture.
Great conversation. Thanks for sharing these insights.